All right, here's our look at the stock market for this week. We've seen the stock market put on a little bit of a rebound, especially off of the last Monday's big sell-off that we had early on some Evergrande fears. And this has been a week that the market benefited from people coming in and looking at some bargains. I talked earlier in the show about some of those bargains being Chinese stocks, which are down over 50%. So some of those ADRs are getting bought. You should look at those. And the overall, after the market had fallen, 6% for the S&P or 7.5% for the NASDAQ, it made sense that some buyers would come in. A lot of the mega caps, as far as in the tech stocks, they don't look great. If you look at RV's video that he put up this week on the mega caps, you're going to see a ton of information on there, and they're pretty mixed, but a lot of the techs look like they have some problems. So that kind of is weighing on the market, and we see the NASDAQ weaker than the rest of the market actually today. So we're going to look at the S&P 500, looking at the SPY, and get a peek for like the next 1 to 3 or 1 to 4 weeks. So that's the Canadian that I was looking at earlier in the show. If you didn't see that piece, you got to go see that. So here is cycle analysis on the SPY. And you can see that, we had been moving up, of course. And here are your cycle brackets right in here. And this low came right over here at this point, and this is your 6% drop. It says 5.7% right there. This got it down to about 6% right over here. What's interesting about that is that this is a cycle low and this is a cycle breakdown. What that says is that rallies are likely to fail. Now, this one got all the way back up. I'll get a little tighter look in here, to that minor 78.6%. That's pretty unusual when you get that big of a bounce. Still, the momentum is negative, and you could see this gravestone right over there, that gravestone doji, that occurs actually in the intermediate sell zone. That's right in here. Let me make that a little clearer for you to see. And that is a warning that there are sellers in the market up in that area. And it doesn't surprise me that the market could bounce halfway back here. And we had, these pretty good size upward attempts, 1, 2, 3, and then this big upside gap right here. But it really, the highest probability for the stock market is that it's going to fall back in here into this area. Now, the expectation would be that it would test this area about 426 on the downside, or get even lower in there. But we're in a very choppy period right now where it makes sense when you're coming off of a extended bull market top that a lot of traders are still in that paradigm, investors, where you buy the dips and expect it to blast off to new highs. But notice this dip, it didn't blast to new highs. It hit resistance and then began to sell off again. It's likely that we're going to see a lot of that. And we make it into a very choppy period over here. But overall, I'm thinking that the highest probability, as momentum has turned over in the intermediate charts, is that rallies will continue to fail, and that the biggest risks are to the downside. So for the next 1 to 3 weeks, we would expect the next week right over here. The minor cycles have kind of been around between 9 and 11 days. That's about what this one is right over here. And then gets this rally, and then you get another one where they kind of line up here between these two timing lines that you see. That's where the bottom should come up. That cycle low of 428.86 was taken out. That is a bearish occurrence. It should mean that rallies fail. And this rally is a little bit sharper than I would have guessed that would happen, but still, the jury's out. We don't really know if that will hold. And again, the probabilities are that it won't. We're looking for the slim ribbon PO to give us a down arrow right over here in the next day or two, and then essentially signal that the declining momentum is still in force. You can see in here where the slim ribbon was giving you all of the green indicators right there, where it was positive here, and the signal line, the slim ribbon PO, giving you these positive readings all in here and here. Well, you can see how that changed. And the market has changed even though traders and investors don't believe it yet. So again, the chances are pretty good that we're going to see downside in the market. So we're going to kind of look for downside in the market here over this next, we'll just look for maybe 4 to 8 days. And then what happens after that is you get into another upside phase in here where it's probably going to try to get to the upside again. With some stocks, as we illustrated, RV illustrated in the mega cap analysis, near bottoming areas, and some stocks really looking not good. This could be a very choppy area in here, and that's really what we're looking for. Bull markets, when they peak, they don't just all of a sudden ring a bell and go into a huge decline. That doesn't happen. You get these residual buyers that come in that keep believing that the bull market's going to continue. Of course, I don't believe that. And right now, we're looking at evidence that says, well, at least for the intermediate term, it doesn't look like it will be able to do so. So we'll be looking for about a week or so down, and then again getting into maybe another week and a half or 2 weeks of potential rally out over here. So for those stocks that you love, the ones that you'd want to buy, it seems like if we got this dip in here, which is the highest probability, then that would be the opportunity, because seeing the potential for two-sided trade in here over this next month's time, it seems like that would be the best way to be looking at this market, considering that overall bias is to the downside, but it's really likely that it's going to give two-sided trade for those that are active. In big rallies in the stock market, I believe that investors should be looking at those as opportunities to reduce long side risk. But for active traders in the market, people that are active, I think there's two-sided trade here coming up for about the next month, and that could be a very good opportunity. So maybe a week or so down, and then maybe a couple of weeks back to the upside, and really looking at this range in here of somewhere down under 425 on the SPY, potentially up here to as high as 448, though I doubt it. If it got through there, that would give me some reason to be reevaluating this. Maybe up over here about 443. So for let's just say 423, 443, that kind of looks like a range. And if that is what occurs, there's a lot of opportunity in there for those people that trade based on ranges, and you can see that may be some great opportunity coming up right now. So that's a look at the cycle analysis in the SPY and the absolute fantastic clarity that you see in there of the information that was bullish that has now turned more negative. I think that is very clear.